My question is, Frank, it's a shoo-in that GameStop is going to buy Bitcoin. What I want to know is, how do investors react? Because this stock is driven by retail investors for the most part. How are investors going to react? How is the brand going to continue when they sell some of their Bitcoin? Because he said it right in the disclosures. Hey, listen, this is not a sailor strategy. Never sell your Bitcoin, in my opinion. And so that's what I really want to, you can trade this. This is going to be a great trading, volatile stock. But who the hell is giving these guys money at 0%, Frank?
I would.
Yeah?
Yeah.
Why? What is your upside?
Upside is massive and the risk is low because one is the company's not going to go bankrupt with that much cash on its balance sheet, right? So basically it's going to pay the bondholders off. So you're definitely going to get your money, right? And say that the notes are due in 2030, you're going to get all this money. So the risk is off the table, right? Because you're not going to lose $4.7 billion, right? Because they're the cash. So when you're buying the bonds, your biggest risk is like the company's going to go under, right?
Right.
You don't have interest
I'm not
rate
worried
risk.
about that.
All right. So you don't have interest rate risk, right? So basically if you're buying the bonds by 2030, you're going to get a great return, right? I'm not too sure the details of this. I'm trying to look at
If the stock goes up, you get zero return if the stock doesn't go up. That's my point.
Well, where you're buying the bonds, right? You're going to hold it to whatever the bonds.
But you get 0%.
You get 0% of the interest.
Yeah.
But still, you're going to make, it's not just the interest, right? If you're making money in the bond, but it's the conversion premium, which is 35 to 40%, which you could factor into the stock. So that's where the conversion premium is massive, where that's why it makes sense to get into this, because you're not going to lose money on the bonds. You're not going to lose money on the bonds. So if you hold the bond maturity, you're not going to lose money on it, right? And you're going to hold maturity. Your biggest thing is you're going to lose money if the stock goes under. With that cash balance, you're not going to go under. However, with the 35 to 40% conversion premium, you're going to be making a lot of money when you convert these shares and you're going to be able to sell them right away. That's what people getting into this deal. As retail equity holders, it doesn't present a good situation because now it's dilutive when they convert. They're more concerned with, I mean, the reason why they did this, because the company, one, they can keep their cash on the balance sheet, because my question would be like, okay, if you want Bitcoin, why not use the 4.7 billion you have in cash and buy it? Well, we could raise money here, but we'll give away the fort for whatever. Now, the kicker is, let's see if Bitcoin goes 150 to 200,000, which there is a very good chance that that happens by 2030 because of the massive demand we're seeing. There's a fixed supply.